Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 perfect 10 stocks for 2024. So let's get into it. Alright guys, welcome back. Thank you all so much for being here and happy holidays. I hope you had a great Christmas or whatever holiday you celebrate and are looking forward to the new year. I know my mom just arrived yesterday for a visit and it's her birthday today, so let's send her some birthday love in the comments. Now today we're going to be taking a look at 3 stocks that score a perfect 10 on the TipRanks Smart Score and also come in with a strong buy consensus from Wall Street analysts. So we're going to take a look at these companies, what it is that they do, and of course what those analysts are predicting for the stock's future. You can follow along over on tipranks.com or by downloading the mobile app in the description down below. Let's jump right into these 3 strong buy stocks. Our first 10 out of 10 stock is Delta Airlines. They trade under the ticker DAL, currently priced just above $40 per share. In the past year, they have seen growth of nearly 28% and have climbed over 10% in just the last 3 months. They score a 10 out of 10 on the TipRanks Smart Score with some increased insider transactions and very positive crowd wisdom. Delta is well known as one of the major airline carriers in the United States. The company is based out of Georgia and boasts more than 100,000 employees, operating more than 4,000 flights per day worldwide, and can take passengers of upwards to 280 destinations in the Americas, Europe, Asia, Africa, and Australia. During their last quarter, they did come out with an earnings beat and record September quarter revenues. Now that was near the start of October. The next quarter will be coming up soon on January 11th. Analysts will be anticipating earnings per share of $1.16, and that would be a decline year over year. In their last quarter, though, they did come out with notably higher earnings at $2.03 per share. They had earnings growth of over 30%, and they did improve their outlook for the December quarter. Revenue came in at $15.5 billion, with operating cash flow of $1.1 billion. At the start of December, a 5-star analyst from TD Cowen named Delta Airlines as their best idea for 2024. And more recently, we had another analyst from Morgan Stanley reiterate their buy rating with a pretty bullish price target. They noted that their rating is rooted in a positive outlook on the airline's demand trends and financial guidance. They note that Delta's management has a constructive view on the current demand, especially from premium consumers who prioritize travel. Their price target on the stock comes in at $77, which is the street high and would be an impressive upside of 89%. That is one of 13 analyst ratings, and Delta does come in with unanimous strong buys. The average price target comes in just above $55 per share for an upside potential of 36%. Down below, you can see that high-end price target there. Our 5-star analyst at TD Cowen giving it an upside of 20% and a low-end price target here at 15%. Our second perfect 10 stock is MobilEye Global. They trade under the ticker MBLY, currently priced just shy of $44 per share. Over the past year, they've seen growth of over 30%, including nearly 7% here in the last 3 months. Their 10 out of 10 Smart Score does come with both increased hedge fund activity and insider transactions. MobilEye is a tech company with a focus on autonomous driving and ADAS, or Advanced Driver Assistance Systems. Their sensors can be either factory installed or retrofitted to existing vehicles and helps drivers maintain a safe distance from potential road hazards, everything from other cars to lane markers, road shoulders, and crash barriers. The company has working arrangements with over 50 of the industry's original equipment manufacturers, and MobilEye sensors are installed on more than 125 million vehicles globally. MobilEye did post an earnings beat in their last quarterly report back in October, and the next quarter will be coming up on January 25th. For their Q3, they saw revenue increase 18% year over year to $530 million, and earnings per share came in at 22 cents, beating expectations by 5 cents per share. This upcoming report, analysts will be anticipating earnings per share of 24 cents. One 5-star analyst from Wells Fargo recently reiterated their rating and weighed in on the stock. He notes that the company is in a unique position in the ADAS market and attributes their growth trajectory to a combination of general production growth and an expansion in ADAS adoption, with projections indicating a steady rise in adoption rates year over year. His confidence in MobilEye's competitive advantage and market share outlook, particularly with the next significant update scheduled for early January, further bolsters his rationale. MobilEye does come in with a strong buy rating, with 13 current analysts coming down to 12 buys and 1 hold. Their average price target comes in at $50.82 for an upside potential of 16%. Down below, we can see the most recent ratings. On the low end, we do have a couple buy ratings with upsides just over 2% and a high-end price target with an upside of over 22%. And our third 10 out of 10 stock is Stellantis. They trade under the ticker STLA, currently priced at $23.55, seeing incredible growth of 85% this past year and growth of over 22% in the last 3 months. Their 10 out of 10 Smart Score does come with some bullish blogger sentiment and increased hedge fund activity. Stellantis is the name behind a large automotive conglomerate. They distribute and sell vehicles under very popular brand names, including Alfa Romeo, Chrysler, Dodge, Fiat, Jeep, Maserati, Peugeot, and Ram, to just name a few. Headquartered in Amsterdam, as of 2022, they were the world's 4th largest automaker by sales. Now, Stellantis does only report earnings twice per year, so the last one was back in July, and they did miss on earnings estimates. The next one will be coming up shortly in February. Back in July, they did post strong growth and set new records in net revenues and net profit, seeing their revenues grow 12% year over year. But on the earnings per share side, things did fall short, coming in at $1.48 instead of the $2.91 expected. For this other half of the year, coming out on February 15th, analysts will be looking for earnings per share of $1.88. Though they haven't reported earnings in a while, we do still have some recent analyst ratings, with a few being reiterated in just the past few weeks. One of those is a reiterated buy rating coming from Bank of America. Analyst Michael Jacks gave their buy rating due to a combination of factors that set Stellantis apart and offer a positive outlook for the company, highlighting their robust pipeline of key model launches and a comprehensive electric vehicle strategy as significant growth drivers. They also noted the company's strong cost control measures and limited exposure to volatile markets such as China, contributing to their promising prospects. The Stellantis strong buy rating is based on 15 current analysts, but we do have a bit more of a mix, with 13 buys, 1 hold, and even 1 sell. With an average price target of $26, upside potential will be north of 10%. Looking at our most recent ratings here, you can see this 1 sell rating coming in from Wells Fargo with a downside of 15%, but it is the only one. Our more recent ratings all coming in as a buy, with upsides ranging from 12 to nearly 17%, and a high-end price target of $26 from back at the end of November. So that is a quick look at 3 stocks, all coming in with a strong buy consensus from Wall Street analysts and a perfect 10 score on the TipRanks Smart Score. Let me know your thoughts on these companies in the comments down below. I always love hearing from you guys. And of course, keep in mind that these videos are never a suggestion to buy or sell any specific stocks, just sharing what Wall Street analysts are up to. So please make sure you always do your own research and due diligence. Thanks so much for watching. Have a wonderful day, and I'll see you back here next time.